Welcome in, you trader nerds. I am Sweet Bobby, and glad to be with you today. Running a little late as usual, but thanks for your patience. All right, the market's down again. OB steel looks like an inside day, doesn't it? Not really doing anything. We looked at our little what do you call big green monster. Big green monster looks like we're oversold. This is a magnet, point of control on volume, and of course we anticipate they rise back into this area to fill these scalps and to get us back into the thing. So, but who knows, right? Who knows? And we really don't care. It doesn't matter. Boy, is it hot in here? Is it my only one? Roll up my sleeves. Just got back from the old gymnasium. Okay, let's see how our little Tasty Works account's doing today. Dang it. Dag nabbit, down $44. Let's see if that's true. Let's bring it over to the side. I don't like this not making any money. They're holding on to our premium, which probably means that volatility's stayed a little elevated. We're not getting any relief there. So we'll see what our net lick is today. So we are at, oh yeah, we're down 36,975. 36,975. Let's see how bad it is. It ain't too bad. 36,975. 36,975. They're holding on to our premium. It must come out at some point, but it hasn't come up yet. So we're down $58 on the day. We're still doing good. All right, so our Greeks and ratios, let's go record them. Y'all know how we do it every day. So I got my new workout shoes in, and they're sandals, so that I have this unusually long toe, the second toe. And I told y'all the story about the doctor wants to shorten my toe. He wants to pull some ligament or something, and I'm like, listen, doc, with all the surgeries y'all have out there, I've never heard of a man having anything shortened. I can't imagine going under the knife to have something shortened. So I'm just, I'm fighting that. But at the same time, that little thing is whipping against the edge of my shoe. And I know what you're saying, well, Bobby, get a bigger shoe. So I've got orthopedically measured shoes. I got the inserts, everything, custom insert. I got everything. And it still rubs up against the end. So I bought these sandals to work out in that are open toe. And so I was going out today, and Beth goes, oh my gosh, you look like an old man. Now, y'all, I don't want to hurt any of y'all's feelings, but some of y'all men go outside in the summer wearing sandals with socks. Y'all can't do that. You just can't. Was this 22 yesterday? You can't do that. Y'all have got to stop it. Now, Ed probably dresses like that. Ed's like, what are you talking about? I do that every day. And we know that's probably how Ed dresses. But it really, people are laughing at y'all. If you're going out and you are going out looking like that, people are laughing at y'all. So, because it's such an old man look.
What if I'm wearing warm-ups with white socks and sandals? How would that do?
Yeah, Ed, dude, yeah, that's not cutting it, Ed. Mm-hmm. People are laughing at you when you go out. I mean, I don't want to be the bearer of bad news, but Beth says, oh my gosh, Bobby, you look so old today that you're wearing that.
Yeah, I have to tell you, if you go out there and you look at the younger people, they're actually wearing a lot of white socks and sandals these days. So
yeah, and they're also not wearing socks. Even when they get married, if you watch Married at First Sight on Netflix or whatever that is, I watched Married at First Sight, or no, what is it? Love is Blind. And I'm like, y'all are going to look back on these pictures and y'all are going to be horribly disappointed because people are going to laugh at y'all. They're going to call y'all pawpaw, even though, you think you're hip with no socks. You got to wear socks with shoes, but not with sandals. So I was wearing socks today. And Beth's like, oh my gosh, Bob, you look so old. And I go, Beth, how else am I going to protect the toe? I don't want to lose another toe. Now, the only benefit to losing another toe is I'd be able to swim in a straight line if I got in the pool, right? Which I cannot now. I keep going in circles because I've got, 4 toes on one foot, 5 on the other. So I don't know what the solution is, but we'll figure it out.
I think the solution is we should all dress like Obi-Wan Kenobi this morning.
Yeah, look at Ken. He's got that look. I like that look. Obi-Wan, be who you are. I like it.
No one can mess with him about his socks, I can tell you.
Oh, absolutely not. Of Gordon says, if we're talking about uneven limb length, then get out the rack versus the axe. Yeah, I mean, I don't have that toe on one foot, so I don't have to worry about it. Matt occasionally wears socks with flip-flops. Matt, oh my gosh. First of all, flip-flops. Y'all, if y'all wear flip-flops, I worry about you. I worry about your judgment, because there's nothing, I cannot stand to hear those things going down the, when someone's in front of you and they go, oh, I can't stand those things. Crocs and socks. Yeah, that's just, that's pawpaw look there, y'all. And that's fine. Look, if we want to be pawpaw look, that's fine. And I told Beth, I said, well, I'm not going to wear this anywhere else but the gym. So then I'm in the gym the whole time, and I'm subconscious. I'm thinking, oh my gosh, people were looking at me like, hey, Pawpaw's in the gym, which they probably look at me like that anyway. So I just got to figure out, I don't care what they look like. So based on our conversation yesterday, y'all, what would you do here? I'm not putting on a trade, right? So, I like what is Evan here today? So I like what Evan was talking about yesterday, and Ed had been talking about closing stuff. So why don't we look at maybe just closing one, just strengthen our heads just a little, right? I got no problem with that. So let's look at our Z2s and see if we got anything here that's really, really profitable. And let's see if I can, 97.5, 97.4, 97, 98 point. What the heck? I'd like to, is there not a way to show what my biggest thing is? Here it is. No, that's 98.3. Okay. Let's see what be neat just to close something, right? Let's see here. What am I doing, young? I'm trying to sort by my most profitable, but it doesn't look like it's doing that. 97.5, but then there's a 97.6 there. What the crap? What the crap?
Yeah, unfortunately, it won't let you sort by profit on Tastyworks. I think it has them organized by DTE and the strike. So like all your most recent DTE should be at the top, and then those should be organized in order of strike. And then your next DTE, and those will be ordered by strike, but you can't sort by profit.
Oh man, well, that stinks. Well, let's see here. I guess I could do it by profit on the open. Hey, look at that. Is that letting me do it? No, it's not. 107, 12, 112, 258. Holy steel. Look at that. 95.6%. I've made $258. Let's just take a little something off, right? I got no problem with doing that occasionally. Right? I don't have to close everything that's over 97, 98%. Let's just close one. So let's see, this is a 33.50. Let's just close this. These little nakeds right here. Let's do that. And that gives us a little bit of a buffer for 9 days. Now, do we have to do that? No. Let's see what the commission is on something like that. Or you could just close one of them, right? I don't have to close two. Let's see, it's going for 45 cents. See if we can get it out for a quarter. That's good. How much are they going to cost me to do this? They're going to charge me, $3.54, right? No commissions, and it's just the fees. Okay, we can get out of that. See if we can get out for a quarter. There we go. Right. So, we're just shaving. We're just shaving. I like it better that way than saying, oh, as soon as something gets into, blah, 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 I'm gonna take it. I just kind of like, let's just shave it off. And all that does is makes our little whale much stronger, right? But only for 9 days. So, you can hold on to it if you want to. I'm comfortable where I'm at. So we're at 41%. That should have, let's see if I can update my buying power. That may have given me a little bit of buying power relief. How do we do this again? Let's say 15,434. All I gotta do is close that and nothing. Jack, squat, crap, nothing. Okay. All right. So we're good. So now my delta's 35, theta 82. Did anything change by closing those? 35 and 82. Yeah, you started that in college. Socks with sandals is a German tourist. I like that. All the stud tennis players did that, man. Wait a minute. You were a stud. Wait a minute. Hold on a second. I could see you being a tennis player, a stud tennis player. I'm not exactly sure. Pumpkin Man, and you don't have to close the PDS that you put on when you sold the naked put that you just closed. Exactly. I don't have to do that. I ain't got to do anything. I didn't have to close that. But 34.82. What's my theta now? 34. And see my theta, y'all, it's really good. It's really nice theta. So now I'm at 35 and 82. So it didn't really take out any theta. So I'm good. Good. Nothing to do here. Nothing to do here. Matt, get your wife on here and let me hear her say that you was a stud tennis player. Now I want to hear if she calls you a tennis player or a stud tennis. Okay, you did play college tennis though. That's cool. I play tennis just about every day, dude. I love that. That and what's that little thing where you get in that little room with all them stinky men and hit that little ball? What is that called? Racquetball. We should do that all the time. All right, let's go to this account. Let's get our little Crimson account. See how we're doing over here. I'd love to play the Jeffersons. I just don't see it happening, y'all. 27,543. 27,543. You getting the look at that? Yeah, we're so close. 27,543. Dang it. Damn it. Oh, wait a minute. I gotta put that there. 27,543. Remember how Ed's got us this new system of doing, because that's going to be the 12 to 7. And then we can do things to compare, right? So we can do this again, 12, 7, 22. There we go. So that gives us a way of.
We change it to the 8th today, Bobby.
Oh, you want me to change that to 8? Okay.
67, make it the 8th today, so you don't,
Yes, I don't do that problem tomorrow. So that allows us to play with our Greeks. I like that. All right, so we're down Daggett, what, $55, dadnabbit. Let's go get our stuff. Remember, Ed's got us in all this, T-bills and stuff. He's wearing his white tennis shoes.
I'm such a troublemaker.
Socks. All right, so we're at 13 and 39. 13 and 39. Let's see how that looks.
My small size is made up for by the trouble I generate.
I have no comment. 13 and 39. Let's see, our buying pair is 10, 854. 10, 854. And it's fun though. I just love the show. This is so fun. Oh, look, our buying power went down. And I think it may have been because I think I did some trades after y'all left yesterday. I think I did. Let's see what I did after y'all left. I don't think y'all remember this. Oh, yeah. I didn't do this with y'all yesterday, did I? I put on a diagonal Sweet Bobby hedge yesterday. I went out 72 days for the short, 44 days for the long. Took in $171 a premium and then paid $165. So I took in about $5 or $6 on a Sweet Bobby hedge. Diagonal version. So I did that yesterday. So let's go back to our Greeks and ratios, see what we look like here. So no adjustment on our buying or on our deltas. We are effectively delta neutral. We have theta 0.13, so we're fine there. And our buying power went dang, hold on a second, 12.7. Yeah, that's right, 22. Let me do that, 22. There. All right, so everything looks good. We're 39.49%. What the heck? 10, 7, 20.
VIX is at 23.
Huh?
VIX was 23.
Oh, is it 23?
Yeah, close enough. 22.8.
Okay, 23, 22, something like that. So everything looks really, really good. I mean, we're just a little hot on our buying power. So what we could do is what we did yesterday. I kind of like the Ed and Evan, the E-boys here. And they're saying, hey, Bob, take a little risk off that 9 days. Just maybe give you a little ease on your buying power. So let's say, look at all these T-bills we got now. So let's see our elected puts here. We got 2 here that are at 97% profit. All right. We could take that out. Let's see what those look like. The 2800s, right? Now they're way out there, y'all. Way out there. Do I have to take them off? No, I don't have to. Let's see what they're taking up on the Analyze tab. So let's go to the macros, hide the simulations, and let's see those 28. Let's see one series. There we go. And so here's all my. Here's all my stuff, y'all. I mean, it looks so good. Look at this, y'all. It's just. This is why I almost. Y'all see how this is going up. Y'all know why? Because I closed part of a put debit spread. Now look what that does, y'all. It makes that thing just go up, 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 up. Look at it, it's really good. So, gimmies and gotchas. What we could do is see what that 2800 is doing for us. Let's go see him. 2800. Where are you, little friend? little old friend. There he is, right? There's two of those. So let's take everything off now. Let's just see what he's doing for us. I said, let's take everything. I said, everything off except here. Now, let's see. We just got the 28. No, there's something else on here. What is it? Future. I have a future, do I? No, we got to take all this off. Okay. 2,800. And if we want to take him off, the good thing over here is we can really analyze him and see what he's doing. All right, so here's our 2,800. If we take him off, that should go flat. There he is. So here's our 2,800. We got 9 days to go. If we're down 5%, he starts going down $36. He's down 138. He's down 449 on a 12% move back, and on a 20% move back. I mean, here's a 20% move back. He would lose us $500, but that has to happen in 9 days, y'all. He's about to expire, isn't he? So how much stuff is he using? Let's see what he's doing. He is giving me theta 378. That's a lot of theta. He's taking up $231 of buying power. So I could, effectively take off $231 of buying power, and that looks like a lot of theta, doesn't it? Ed and I were talking about it the other day, and we was like, is that theta right, really? It doesn't seem like it's right, because we've made all the money on this thing. Look at this. Let's see what the P&L opening is.
I can't see how it's right, because if that thing's at 30 cents, you have 30 cents on 2 micros, which is $15. No, $1.50. It's $1.50, right?
Oh, here I was on the wrong day, Ed. Let me go to the 7th. Okay, here, this is more better. Theta of $1.28. Maybe that's right. So right now, I was on the wrong day. So right now, we can only make $3 more on it, right? We can only make $3 more in 9
Right.
days.
We're 30 cents at $5 a point is $1.50.
Yeah.
Times 2 contracts, it's $3.
Yeah. So, now let's see what it does to our hedge if we do take him off. That'd be kind of cool, right? So let's click all this stuff again. Let's make
And again,
sure.
Bobby, I think you had like 5 of those strikes with 2 shorts in the next 9 days, if I remember correctly.
Yeah, probably so.
So you could take all of those off for, $3 times either 4 or 5, however many tranches there were.
So here's all my stuff, y'all. This is why this is why it's a battle for me. This is why it's a battle, because I go, look at this stuff here. Right now, I'm up $120. I can only go to $123 in the next, 9 days. So, but watch what happens. If we're down 5%, no big deal. Look at that, y'all. If we're down 12%, look at that. I'm up $1,200. And if we're down almost 20%, I'm up $3,000, leaving that darn thing on. So a 20% move, I'm up $2,200, right? At expiration.
Hey, Bobby.
Yeah.
It touches on our conversation yesterday, though. If you're going to look at it that way, you have to look at it from the side of what Ed and I are saying. Take off all of your short strikes and then see what you would be at on a 5%, 12%, 20% down.
Oh, yeah. And
you've already collected everything off of the short strikes.
Right,
so holding on to it, it's not going to benefit you. If anything, those are going to feel pressure as you drop. So they're going to kind of work against the hedge.
Mm-hmm. So let's look at taking Mr. 2,800 off only. Okay, let's see what he does. So right here is my biggest point where I can make $3,000, right? If I take him off and we get the big down move, then I'm up. That doesn't seem right. That ought to be more, right? 12, 17, 18, 19. How can that be right? Hold on. Let me think about that. That's with him. 20% down move is 2268 without him. 20% down move is 2,200. Yeah, think about that. Why does that not sound right to me? It sound right, we're taking him off. But now watch this. Now watch this thing here. This is kind of cool though. If you do take off a put debit spread.
That's right, Bobby. What if you took all 4 of those? Uncheck all 4 of those and see what it does for you.
Okay, right. This one here.
Yeah, you had 4 or 5 of them in that 9-day expiration.
Yeah.
And again, it's not the risk, but if we're going to talk bombshell, we don't know when that
We
ridiculous.
don't know when it's gonna come, exactly. We don't know when it's gonna come.
And if you want to take off those 10 contracts for like under $20, I don't know.
Here's where you really make this thing.
We'll
Look,
put out somewhere and just recoup the premium that way if I'm so concerned about it. Again, I think the optimal way to do it is build in this exit premium that you're looking and debating on spending or not spending now. Build it into your best practice at the beginning when you sell the tranche. Bring in enough to take these things off at 50 cents or a buck and a quarter or whatever, and remove them. And so you're not fighting yourself on, oh, I want to capture the rest of this, da 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 da. And then I want you to touch on the put debit spread part, because as you take off put debit spread naked puts, that's something I'm still having trouble getting my mind around. I know we're removing notional risk and we're creating this huge exponential spike in profit to the downside.
Yeah.
That part I'm clear about.
Mhm.
What I'm not clear about is when you remove the naked put at whatever cost that is, you still have a long put that has some cost attached to it. And I mean, it's worth something, but it's only good for 9 more days and then it goes to put. So I'm very, very clear on taking the naked put part off. I'm not 100% sure on taking the short put of the put debit spread off. But I have started to think about that as well, in that instead of taking off, I wanted to throw this at you. I was going to do it privately, but I'll do it in public. Instead of taking, and you may have touched on this and I might have missed it, but let's say you have a 3750, 3700 put debit spread. What if you just roll up? And I'm looking at doing it some further out strikes where I've become clogged up with put debit spreads. I almost have too many put debit spreads on. So I've been looking at taking the short put in the put debit spread, like say 3750, the 3700 short, and rolling it up to like 3760. And taking in, like I was looking at this morning, I could take in like 16 points to do that. Now I'm removing the protection of the put debit spread, but I'm not really increasing my risk other than removing the cushion of that specific put debit spread, which was marking like a buck. I can roll it up 50, 60 points and turn that into a 16-point credit and take in that 16-point credit. And I'm just wondering if that might not be something that we need to look at on occasion when our portfolios are loaded up with put debit spreads. And this would be an option instead of just removing that naked put at a buck 50 in the put debit in the put debit spread, just roll it up.
But let me ask you this, Ed. Isn't the reason though that you're so loaded up with those is that you were not necessarily doing them all at the same time, right? You were actually, there were days where you were just adding put debit spreads.
There in the past, I have, and I'm getting away. I haven't totally gotten away from it.
Yeah, I don't think I'd do that. I mean, that I wouldn't. But
well, I did a bunch of put debit spreads last week, and I was filtering in as the market fell. So I'm filtering in as the market falls now. So it's kind of working out. But as I've mentioned before, the true benefit of that is not often realized for me. Usually, it's more of a distraction and a headache to try to get that little bit of extra pointage. So I've kind of shied away from it. This is more of a portfolio management technique. So yes, to answer your question, sometimes I do put debit spreads proactively. I almost always attach at least one naked put to it, so it's not, quote, costing me anything, unquote. I don't have any profit per se, but it's not costing me anything. But I'm getting away from that, and now the majority of my put debit spreads going forward will be unattached put debit spreads because the naked put was removed. So, and that's going to happen over time. If I just keep filtering and keep filtering, I'm going to have a lot of them. And I like it because that's what keeps our portfolios extremely stable in weeks like this week, where we've had like whatever we've had, a 3 or 4%, 5% pullback. My account is barely flinched. So I don't want to negate and I said yesterday, I'm looking at maybe doing the SBHs and not doing any put debit spreads. That's for a month or 2 or 3 out. I got a lot more studying and thinking to do, and hopefully other people help analyze and punch holes in that. But I just want to throw out there that I am finding I have too many put debit spreads. The other thing I was looking at doing this morning is it was like a 38.30, a 37.80, and a 37.50 and a 3700. Those two put debit spreads. I was looking at removing the two in the middle and leaving myself 130 wide spread, which that would bring in a couple $100 or a few points, 4 or 5 points. So I don't know. I don't want to over tinker, but I'm still looking for management best practices in what we're doing. And I don't want to fish for that forever. And I don't want to look like I'm chasing shiny objects, but I do think we're in such an evolutionary phase that all this stuff should be on the table for examination.
Yeah, that's fine.
I
Okay,
wanna
so let's look at this. Okay, go ahead, Evan.
I was just going to jump in because Ed was asking some questions about the removing of the short put and the put debit spread. So two questions for you before I really jump into it. So the first being, what's the point of the Sweet Bobby hedge? For me, I look at it and I say, okay, we want protection to the downside. And the way you get that with options is by having more long puts than you do short puts. Would you agree with that, Ed? Okay, so if you have 2 long puts and 1 short put, you're going to have infinite downside protection. The next question, if you were to sell a put at 3,800 and buy a put at 3,800, then they're going to be the exact inverse of each other, right? So say 3,800, you sell 1 put and you buy 1 put. That means once one hits 100% profit, the other will be at 100% loss. And that's the theory that or the assumption I'm making here with our put debit spreads. Since we sell 1 put and we buy 1 put at the same time, if we can take off that short put for 90% profit, that long put is already going to be at a 90% loss. And that's why I'm advocating for removing the short put, because we have already essentially taken all of the profit out of our short put, and we have already assumed all of the loss on the long put. So by removing that short put, we're essentially saying, okay, we will accept that last 10% of loss, but it gives us unlimited downside protection. Does that clear up the removing of the short put for you at all, or did I just make it more confusing here?
For Ed?
Yeah, I was trying to clear it up for Ed because he was asking questions about why we'd remove just the short put instead of the whole thing.
So that was good info, Evan, and I appreciate it. I just want to bake that cost in to the beginning so that when I take it off, I don't want any hesitation when I'm taking these off. Like if I were looking at this and I had Bobby set up, I'd be ripping off all those naked puts right there, and I'd be doing 1 naked put further out just to collect some premium, yada yada, like y'all have heard me discuss before, or go out and just do a flat out new trade. But if I want to take in a certain amount at the beginning, now I want to take in a certain amount, and I've already budgeted. I basically sell a tranche for around 12, and I'm going to use between 50 cents and $1.50 to get out of the naked put on the tail end. I'm also looking at how do I want to do this Sweet Bobby hedge thing? Do I want to leg in, which is fine, or as we mentioned on the tail end yesterday, it might have been the after session. Do I want to bake in points at the beginning to help pay for that? On the tail end when I'm taking off the naked put part, or what? And I've even looked at maybe like, okay, maybe I want to do a tranche for $14 and then use $2 of it immediately to go out and do an SBH, help pay for that SBH, either making it no cost because I'm using 2 points. It's costing me 2 points, if you will, but it's all getting done at the beginning. And then boom, it's done. And that's where I don't know. Because again, I feel like I want at least one of these for every 112 tranche that I have. but everything's got a gimme gotcha. So if I move my naked puts up high enough to capture 2 more points, that's a pretty big elevation of that strike just to collect 2 more points to pay for that SBH right off the bat. So I don't know if that's a best practice or not. I'm just trying to figure out the most efficient way to bring in the premium I'm trying to capture and have maximum protection without drowning in the protection or leaving myself way underexposed, which I guess is everyone's goal for those that are at all concerned about any kind of drawdown. For those that aren't, keep living your carefree life, and I envy you. But for me, we don't know what's ahead. I plan on doing this for a lot longer, and I don't want to do this for 8 or 12 years, and then 12 years from now have that quote once in a generation bombshell event unquote, and it wipes out everything plus more, or wipes out much of what I've taken in over 10 years. And I'm spending the money. I'm not letting it accumulate in my account for future use. This money that comes in every month is being withdrawn and used by me. So it's not like I'm piling up cash when I have a drawdown. Oh, well, my profits just got absorbed. It's going to absorb into principal because the profits have already been spent. So I want to kind of throw all that out there as well.
Let me throw this to you guys. I kind of did the analysis when y'all were talking. So let's say that these two were put on the same day. I don't know why I didn't link them together, but the naked put 3 and the put debit spread 4 were put on the same day, right? So if I look at the potential profit of these two as being the credit received, right? The total credit received, normal bull markets, that's what I'm going to keep. I would keep $54.12. That's the 107 minus the 52. If I were to harvest the 2 2800s today, and if I were to harvest the short 33.50 today, it would cost me what, $8, $7 to do that? And instead of me making $54 on the thing, I'm going to make $43, which is 79% of the 54.12 that I took in. To me, when we get back into these little harvesting discussions, it's almost like we're going backwards. It's almost like I'm going backwards to going, okay, I'm gonna take these things off when they're 65%. So I think here's my best practice. Y'all do what you want to, right? I think what my best practice is this, okay? Like Candy says, trust the process. I think what I'm going to trust, here's my trust factor right here. My deltas are fine. My theta is sufficient. My buying power is a wee bit elevated. Okay, so what I would say, or what I'm going to say for me is this. I think my best practice is going to be, if I need to make an adjustment, that's where I'll start taking some things off. I just don't see a need to right now. So what will that trigger be for me? Maybe that trigger is when my buying power is in excess of 50%. Then I'll start peeling things off, right? Because here's the cool thing, I'm at 40% now. Those things are still going to be profitable. I mean, I won't make as much profit, but I think in the end, I'm not having to take them off as much. So I think as long as I'm comfortable here, there's really no need to take them off. Now, I get what we're saying.
Your buying power didn't drop today, though, when you removed that position, right? So right. I don't know that that's going to help your buying power in the future. The only way you're really going to help your buying power is if you remove positions that are at 60 or 70% profit.
Yeah. So I think what reduced my buying power from yesterday probably was I put on a Sweet Bobby hedge, and I think I did close one of the shorts. I don't know if I did that when we were together, if I did it afterwards. So that's probably why my buying power went down a little bit. So now, and I think the key is this. Yeah, I see taking it off in the short term because it's 9 days out and replacing it with something else. So I certainly could do that, right? As long as I'm replacing my theta, that I'm losing from closing out anything. I don't know. Maybe we need to just do it to look and see what it does, right? Just to see what it does to our numbers. Y'all want to do it? I can do it. And let's just see what happens.
something else to add to that.
Sure.
I'm looking at a PDS from December 30th, and it's nicely matured. And if I look at the theta of just that pair, I've got about negative 0.7 left, as that long is still decaying.
Mhm.
But if I harvest off the short, I end up with a -4 for the theta. So I think we got to just be a little bit careful of that, because you don't have the short there anymore. It's not balancing against that decay in the theta. So I've gone
Yeah.
from a negative 0.7 to a -4 on that PDS.
Yeah, and we're not in the business of reducing our theta. So that's what we got to keep. I mean, here's the thing. This has got to control everything, guys. This is where the major decisions are made, right? This is where we make the major decision. The other stuff, this is just kind of gravy, I think. As long as this is okay, like Candy said, trust the process. So is this okay? Well, to me, it is. So I don't think I have to take it off. If I do take it off, just put it out in 60 days. But I agree with you there. So let's see what happens. Let's see what happens if I take off those 2,800s. I'm willing to do it. I'll take one for the team. I'm sitting here and in my heart of hearts, I'm like, don't close those bottoms. Don't close them. They're so safe. Let's look at them first of all. Let's look at the 2,800s. Here they are. And here's why I'm just reluctant to take them off. Yeah, we have a 0.33% probability of that thing coming in and touching. We have a 0.66% probability, less than 1% of this thing even getting touched. It is human nature to think and focus on the catastrophes. That's what we do. That's what we do as parents. You know, oh my gosh, what could happen to my kid in this situation? Well, we think about the bad stuff. You just can't live that way. I'm sitting here going, Bobby, if you close this, that's a goofy decision. I mean, if I have a 99% probability that this is going to be on, why would you even touch it? That's why I'm struggling. I struggle. But I see what you're saying. If you take this off, you're just taking off the immediate risk here and placing risk out 60 days. I got that. But let's do it. I'm gonna do it. I don't want to do it, but I'm gonna do it. Close it, Bobby. Close it. Yes, babe. Yeah, what's the time's the game? 5? Yeah, we probably need to be about, if we're gonna eat lunch, about, I don't know, 1 o'clock or something.
Your mom was asking, I know we'd already told her, she's asking that she needed to cancel her appointment. Apparently she forgot.
Yeah, she probably needs to cancel.
She forgot that we talked about it, you know?
Yeah. Hold on a second, Joe. I don't know, poor man. Yeah, we got the state championship tomorrow, y'all. So we'll probably have a really early session tomorrow, maybe 9:30 or so. What am I doing? I don't even want to do here. If I buy 2 of these, she can't.
I'm gonna try to do it between 12:30 and-
Let's see if we can get out of it for 35 cents. Probably won't. Let's see if we can get out of it for 35. So that's 644. Oh, look at us getting out for 35. Okay, let's go put that in. Right? Let's keep my spreadsheet updated. So we got out for 35 cents. That should have cost me 644. Yeah, and we got out of it on 12/7/22. So we made $162 there. Praise the Lord. Hallelujah. Hello, ladies, right? Make him nice and green. Okay, so we got out of here. Uh-oh. Hey. What a crap. He's not gray, he's green. I just love my spreadsheet, y'all. I cherish it. I think about it often. All right, $100.62. Look at us. We are the stuff of champions. Okay, so now let's see what our Greeks and ratios are, right? Let's see if that did anything. Took him off. So now, monitor tab, let's go back and take our groups off. I'm so glad y'all love this too. Can you imagine doing this by yourself? It'd be so lonely, wouldn't it? So we're at 12 and say 37. 12 and 37. So yeah, it hurt me a little bit on my theta, didn't it? 12 and 37. What did it do to my buying power? My buying power now is 10,381. Now, the cool thing is that took off about what, $500 in buying power, right? Isn't that about what a 112 is? I know, so I reduced that to 36. I just don't like that I reduced I didn't reduce my theta, did I? My theta went up. Market's moved. Market must have gone down a little bit. Did I record that right? So I improved my theta and let's see. Yeah, 1250 and 37. Yeah, let's go back. 12 and 37. 12 and 37. And it was 11 and 36. Okay. And I reduced my buying power. I got the best of both worlds, didn't I? I don't know. Now would I go out and put another one? Probably not. As long as I keep this, full throttle. Okay, I'm fine with that. Would y'all do anything else? John says, I like adding diagonalized 1-2 hedge to keep buying power below my real buying power max threshold. That's good. So you're putting in the Sweet Bobby hedge, and it's giving you a little bit of relief, right? On a diagonalized version. Yeah, you could do that, right? I could go in and put another one of those in. So I'm fine. That helped me here. That helped me on my buying power. That for some reason my theta's up, market must have moved, and my deltas are fine too. Yeah, but it does reduce theta, I think. Yeah, and it does. Right. It's a negative theta trade, even though it brings in a little bit of premium. It does normally show us a negative theta trade. All right. So, okay, we did that. I'm fine. As long as I can keep my theta number fine. I got no trouble taking off some of these things, right? Paying a little bit. And we made $100 on a realized basis. All right, so let's go into the last account. Let's see how he's looking. So let's go here. Yeah. Look at all these things. Y'all look at this, y'all. We were talking about this yesterday. I've made $30 on my, Ed, that's like Ed just sent me a $30 gift card to Applebee's for me and Beth to go to. Look at that. Just from the T-bills. Isn't that cool? So let's see what our account is. This is probably down a little bit over here as well. So we're at 105,801. 105,801. Dag it. Oh, here we go. 105,801. Okay, so we're down $146. Wait, so their correction ratios are, don't count your T-bills. So we're at 56,129. 56,129. 6,129. So my theta went up here. That's what I like. Look, 0.12. My theta increased in our buying power. Let's see, let me get this up here. And remember, I have the VIX. I have it, y'all can, the spreadsheet rounds down. So it's 22 point something another. I have it round down. That's just what I do. I'm a little more conservative. And then my buying power usage in this account is 42,589. 42,589. Okay, good. Now in this account, I feel better for some reason going, hey man, my theta went up. Now it's because of market direction, but still my theta increased. I would be much more inclined to close something here because my theta was really going up. I don't think I had that situation in the other one, did I? Yeah, so 12.6 to 12.7, my theta went down. Everybody see that? So in this account, I'm much more inclined to say, yeah, I don't mind closing something that has positive theta because, I increased theta, 79, 97, 116, and now we're at 129. That's really good. And that would probably give me a little bit of buying power relief, right? To take something off. So why don't we take something off? But y'all see how just looking at it, I could go, I like that. I like this trajectory. So, I can slow my roll a little bit here. I didn't see this trajectory in the other account. Everybody see how that kind of makes, I don't know, maybe it doesn't make sense to you, but to me, it's like, yeah, man, I could see me closing something in this one. I increased my theta, albeit by market direction, market going down. So here, you know, we could go, yeah, look at, you can take these little puppies off here, 4 of those. Trade closing order. Or you could close 2 of them. What the crap is this? $35 here. Cost me $12.88. Okay, so we closed the 28.50s for 35 cents. Let's put that in. See what that changes. $28.50 for 35 cents. 4 of those. So that made us a nice fat profit of $221.24. Why am I grabbing? Why would you grab, Bobby? You're making $224. You greedy pig, you. All right, now let's see what that did to our stuff. So now, wait a minute, let me bring back this. And let's do what Ed said. Let's go ahead and pretend we've got tomorrow in here, 12. Wait a minute. That's the wrong count, Bob. Get your stuff together. Where's my other? Here it is. Net lick. Let's go ahead and pretend we're doing tomorrow's day. So tomorrow is 12/8/22. Keep the same net lick so we can compare apples to apples. 5/8/1. Breaks and ratios now, so we compare to today is our groups off. And we are at 54 deltas, 124 theta. Okay. So we went down 2, but we're still good, right? 54, 124. We reduced our deltas. We reduced our thetas. But now here's what I like, y'all. We still increased our theta, unlike the other count from 116 to 124. Everybody see how that's a better decision for me than if we had gone down. I don't want this going down. I want this going up. So then we go and we say, what effect did that have on our buying power? 42,135. Look, there we go. So if you can say, hey man, we can take this down, and the only reason that's green is because I'm not putting in the VIX from today here. So because I want my formula to work tomorrow. But we reduced our buying power. We increased our theta from the day before, and we took off a little bit of risk. Now that makes more sense to me. Now, how can I verbalize that into a plan? Okay, Bob, it's okay to close things as long as you are increasing your theta and decreasing your buying power. I don't know how to say that. But y'all I want y'all to make sure y'all see the difference and why I didn't have trouble in this account. Let's go back to this account just for a second. In this account, my theta went from 38 to 36, 38 to 37. I don't like that. I don't like that at all. I don't like going from 38 to 37. I want to keep this at 38. I did reduce my buying power. Okay, you say, okay, Tubby, so you don't want to reduce that. Well, how about this, pal? Go out and sell some more premium to increase that. That may be exactly what I do.
Yes, go put on a new 112 in that account.
Yeah, I think that's right. I think that's right. Right. Now, in the other count is not screaming to do that, right? The other count saying, hey, pal, you went from 116 to 124. Good job. You didn't even have to put on a new trade, even though you're a little bit elevated here.
And again, I'm a little confused, Bobby. I don't know which one you had one with 5 strikes that matured, that expired in 9 days. And I think you took one tranche of 2.
Yeah, took one tranche of 2 off.
5 tranches. You could have taken them all off and your numbers would have been lowered. And I'm almost betting you could do one, take off 5, put on one fresh 112, and you're probably going to replenish your Greeks completely.
All right, well, let's put on the 112 first.
That's where I'm like, I don't think we're spinning our wheels. I think, and go back to your list in your in Thinkorswim. Let's see what we're really dealing with. Because if you can actually remove 10 short contracts and replace it with a 112, which is 2, you're multiplying your net, like the theta you're taking off might be 3 points total. They were all like 0.3 or something, if I remember. You organize those by, okay, well.
I feel like we're all on the same page here, but we're approaching it with a different mindset or different phrasing.
And that's well put, Evan. And so what I'm trying to say is I do care about it impacting my return and therefore lowering my theta, but I can fix that with one simple naked put contract sale if I want to do a single, or I can do a 111 or a 112 and replenish all that of all those strikes. I can replenish all that premium. Let's see, you have 2, 4.
About, let's say I got 6, 7, 8, 9, 10, 11, 12 of those.
So you have 12 contracts you can take off probably for an average of 45 cents a piece, which is like, I don't know, 6 points net, which is like 30 something bucks plus commission. I don't know how much it is, but you're going to free up 12 contracts worth of buying power. You could put on a 112 and probably still have less buying power exposure. Probably. I don't know for sure. Either way, as long as we are contemplating a bombshell in our mentality at all, you're removing 12 contracts and you're replacing it with 2. So if you do that and a minute later, the power grid in the US goes down, or whatever hell a crazy ass science fiction, excuse my language, thing might pop up, it's all highly speculative, unlikely. And so therefore not much worry, but it just makes math sense to me to remove the notional risk of 12 contracts and replace it with 1 or 2. And I'm boosting my theta at the same time. And doing this over and over and over again, like maybe it's once or twice a month you do this process. It's systematically removing the systemic risk from your portfolio by doing that. Now, if that is not a worry, I'm guessing, I talked to someone this morning, we were like speculating this. We're kind of guessing that like 80 to 90% of your population listening to this does not give a crap about a bombshell event.
Right.
They just don't see it's very valid or worth worrying about. And I'm fine with that, but for them, but for me, my decades of experience, and I haven't gone negative in an account where I trade, and it blows up and they say, okay, Ed, you owe me X more. But that is what they're going to do. And I've never been leveraged like I'm leveraged now with these futures options. And I'm not saying it from a fear standpoint. I'm analyzing and I'm saying, if I can have 100 contracts on, or I can have 65 contracts on, I'd rather have 65 contracts on in case all hell does break loose at some point. It just seems like it's so obvious. The only negative I see to doing it is the headache of monitoring it and the headache of recapturing the premium that I don't want. Okay, I wasn't even watching what you just did, but
I just did the put debit spread.
Okay, all right. So I'm very clear on what I want and what I'm shooting for. I'm pretty sure the person I spoke with earlier gets it and is in the same boat. I'm positive Evan is here. Evan's practically captaining the ship of, prudence and concern here. And again, I'm not faulting those that aren't doing it, but to ignore this risk and say it's a 0.33 or 0.001 chance, I'm not worried about it. I'm not spending my life waking up every day, yada, yada, yada. Well, you know what? The flip side of that coin is I'm not waking up every day wondering what could go wrong in a severe situation either. I want to proactively build out what effectively is a super highly levered account. These are very levered accounts that we're messing with here. And I'd just rather address that and never have to worry about it And honestly, if I can get to the point where I can balance the account with sweet bobby hedges, put debit spreads and naked puts in some fashion, that will be the end of my learning journey for the most part. And then I can just kind of go in cruise mode. I hate to say that. I don't know if I'll ever be there, but that's what I'm shooting for. I'm not looking to constantly tweak. I just want to make this big giant theta machine that we're cranking here. I just want it to operate with as much smoothness as possible. I was going to say with all the cylinders cranking, but I'm going to drive an EV portfolio. So mine is electricity driven and not gas driven. So I don't have to have cylinders clicking, but I do have to have enough gas in the tank. I have to have enough electricity charge to keep it going. Yada, yada, getting esoteric. But again, you're analyzing this, and that's perfectly, each person, I think, has to analyze this in whatever fashion works for them. You be you, like you always say, you be you, and I like that. So for those 80 or 90% or whatever, they're like, y'all are crazy. I'm not worrying about this. That's a ridiculous thing to worry about. Yeah. Go ahead, you be you. But for those that, like I'm going to be me, this is a real puzzle piece that I think needs to fit into the puzzle correctly to make the whole puzzle look the best it can. So I don't really care what it does to my tiny little theta adjustment. That can be easily adjusted and overcorrected just by doing a new 111. Let's see what happened to you when you did that. You want to enter your metrics?
Yeah. So here's what happened, y'all. So by doing that, look what I've done now. So from yesterday to today, now I have increased my theta, right, by $3, which is good. Now, the problem is and what have I done? We got to kind of skip this. Well, let's see, we don't skip that. We've got to skip. Yeah, so I've gone from 36 to 41, right? So from yesterday to today, I've increased, right? Whereas I did go down. So now I've increased it. So from yesterday, my buying power was 11,625. And now I've taken it down to 11,420. So I think what Ed is saying and what we can all agree is this. What have I done today? Well, I had an issue here, right? A little warning. So now I have taken it from 42% down to 41%. I've reduced it by 200 and I've taken my theta up by $3. Now when you look at this, you can go, okay, I could actually see me doing what? Ed say it. Evan say it.
A sweet bobby hedge?
I could see me actually closing another.
Oh yeah.
In the 9 day. Why? Because I've done what? I've increased my theta. I've increased my buying power.
And again, the final step of what you're analyzing now is not only are all these relatively good things happening, you're also removing the 12 or maybe you've removed 4. I don't remember. Have you sold a total of 4 or 6? I don't know what you've sold this morning. Whatever of that 12 that you had, I don't know how many you sold, but you haven't hurt yourself. You've only helped yourself, and you're lowering. If you took the rest off, Bobby, and you went back to the same metrics as you were, your buying power would be lower, I think, because you're removing those naked puts that are still there. So you would improve your buying power. Your theta would go down a little. If you took them all off, you'd probably be very similar to the metrics you had before. And by all, I mean all 12 of those naked puts and replacing it with 112. Your metrics are probably going to be the same as before. So even if they're flat or even slightly better or worse, you're still better off from campaign portfolio analysis because you only have 2 naked put contracts, whereas 20 minutes ago you had 12. Now, the 2 can blow up on you, but so can the 12 in a severe downturn. That's what I'm looking at. It's the risk versus the reward of keeping those little cheapy stinkers around just cause. I mean, like, again, I don't understand people's hesitation to take those things off, especially at 30 or 50 cents. I mean, come on. But even a buck, and you're talking micros, either way, even if it's the big ES contract or SPX, that is such a tiny fraction of the original premium. I don't know how to convince people that they're not missing anything by doing this. And I don't know what's making people want to retain all these 30 to 50 cent naked puts. other than we haven't really thought about it and analyzed it in great detail. Because to me, the only benefit of keeping the 30 to 50 cent naked puts is the 30 to 50 cents.
And
The
I think it's a lack of understanding that's getting a lot of people to that point. I don't think they're looking at it from the same perspective you are, understanding how little it costs to protect
It's a
their entire
tiny
portfolio.
cost. Exactly, Evan. And you know, it's such a tiny cost. And the notional removal of risk is monstrous. So again, you know, I don't know if people understand like being short an ES contract versus being short a couple of SPY puts. You know, like there's an exponential risk difference on the downside. You know, there's just a big difference of notional risk.
Hey, Gordon's got his hand up. Yeah, Gordon.
If you go back to the Thinkorswim page that's showing the shorts that we're trying to close, there's a theta column in the middle there. Can you open that up so we can see them? So if we were to close one of those pairs, you're going to lose that much theta. It's like that $1.50 you're pointing at there. So as long as whatever you're opening up as a new 112 covers off as many as you can do there. So I just did a 60-day one and it's giving me a theta of about 4.2. So I would balance 4.2 against maybe two of those, like close that one and maybe close the 169 below it. And you've maintained your theta positive. So it's versus, I think you were saying, Ed, if we closed about 6 of those, yes, the notional goes down, but we've lost that much theta and we've only added in a smaller amount of theta and use some of that in our judgment as we're making those choices.
I agree with that. And that's part of what I'm trying to bake into all this.
But man, do y'all understand? I hope everybody gets this. Y'all, as Ed and I have been talking, this is very high class problem. I would imagine 99% of the people that might stumble upon this in YouTube world that are not part of our trader nerds will go, oh my God, this is so complicated. What y'all don't understand, what I hope you guys understand is this: we are on the verge of something really momentous. And these discussions that we continue to have are just fabulous. So the input that you guys are placing here is really phenomenal. And our heads coming together, and we're all going to have different risk tolerances. But man, if we can get to the point where we can remove risk, replace risk out farther, and realize that we're making something much safer, it's just a powerful thing that we're doing here. So these are great discussions. So for those of y'all that are, you know, we've got what, 27 people here today, which is great. But we're on the verge of doing something really phenomenal, y'all. And I hope y'all feel that.
Now, how much delta are we losing if we close this and leave a lot of longs in place? So if we were to close out this whole block of 6 or 12 of these things, we're going to be dropping theta by, or delta by a certain. What is our position delta?
Our
on your
position
spreadsheet?
delta is very little. It's like what, 10 or 11 in this account? I mean, it's nothing, right? Well, 16 now since I put on the new 112.
Okay.
So and that's the thing, y'all. I don't think deltas are ever going to be our problem. I don't think deltas are ever going to be. I've got the conservative in there in the max, but I've never seen deltas getting out of control with this 112.
They don't seem like they're going to be a problem since the retention of the put debit spread has started. And that's what I was talking about earlier. Like sometimes it feels like I'm getting clogged up with put debit spreads. And they're the muscle. They're the muscle that's preventing our deltas from going up. Like your deltas are suppressed because you have so many extra put debit spreads on. You have extra put debit spreads on or extra long puts because you've been closing out the naked puts and the short put and the put debit spread. So
now let's do this, guys. Let's do, because this is kind of good too, right? Not only look at the percentage profit, but you can actually look at the theta that it's bringing in, and we could sort by theta on these 9 days things and close the one with the least amount of theta, right? So let's try to close that now, because we're working for science now. We're working for science. We found out we've been able to get these things closed at the mid price.
Buy these at 30 cents, Bobby. You've been
I'm gonna
buying,
try it. Yeah, let's try it 30.
because you're at the midpoint. Let's try to go below mid.
Let's go. Look at there, y'all. Now I'm upset I didn't do 25, Ed.
I tried to stop you earlier.
You son of a gun.
You were clicking too fast. I caught you just then.
You know, saved a nickel there. All right, so we just closed the 2900s at 30 cents. Let's go put them in. Let's get everything going here. So we closed the 3900 at 30 cents. Where's he at? 2900. That's the one I closed, right? 30 cents. Let's get him in. And again, you don't have to record your trades. The only reason I'm doing it is because I want to see statistics. You don't have to see all that. If you just want to use the net lick and the Greeks and ratios page, that is all you need. All right, so let's check now, see what we did. So taking him off, we are now at, say, 16 deltas and 40 theta, right? 1640. So still about 16. We only dropped $1 there, y'all. And watch what we did to our buying power. This is where it starts getting really cool, right? So now our buying power went down to 1193. So it went down, you know, what, $400, $300, 11093. All right, so now you go, okay, now look how we did. Now look what we did. So this is yesterday. So now what we've done is we've gone from 38 to 40. So we increased our theta. Look, we're half throttle. We could go to 0.3. Our deltas are non-existent. They could be as high as 41 to 55. So that's not a problem at all. I don't think delta will ever be a problem. And then we have taken our buying power from 11,625. We've dropped it, you know, 500, 400 some points and increased our theta. High class solution. We increase our theta, so we should make more profit per day. And we fixed something that we had a little bit of a problem here. So we've gone from 42% to 40%. Dang, is this amazing. Ed says I still remove the naked puts and maybe keep the short put or the PDS on, not sure of that yet. But that PS is a covered risk as you have a long put covering the short put.
That's in response to John's question.
Okay. And what was John's question?
Yeah, right above it.
Okay, let's see it. Let's see so everybody can see watching the YouTube land. Once an account is fully protected with 1, 2, or 3, 5 hedges, leaving the expiration won't matter other than more work to close when Armageddon comes. Sounds right. Okay.
I wasn't positive exactly what John was asking there. But you know, again, removing the naked puts, those are the ones with tail risk. Removing the short put of a put debit spread is only removing the cap of profit from the put debit spread, making it unlimited to the downside. So they're both short puts, but they do function differently because one is a covered short put, the one that's part of the put debit spread. It's capped.
But will everybody agree? Let's see if we can agree on something. Will everyone agree that we today have decreased risk by our buying power? Can everybody agree on that? We took buying power of 11,625, 11,183. It's not a lot, but we have decreased our buying power, right? That's good. That's decreased risk. Now, theta is a measure of risk, but we've increased our theta. How did we do it? We took theta from the 9-day cycle and we transferred it out to the 55-day cycle. So we should still get the burn of $40 a day, $2 more than what we had yesterday. And we've decreased buying power. God, that's good. Boy, that is really good.
And don't forget, you have net fewer contracts short now.
Yeah, so what Ed's saying is the notional risk of having, because I closed what? 4 naked puts today? and now closing 4 naked puts, and I put in a 1 put debit spread and put in 2 naked puts. Yeah,
Hey, Bobby, this is John. Can I jump in a minute?
sure, John.
I'm just sharing this because it may be helpful for someone with a smaller account. My initial comment, and the one thing that holds me back from just closing all these short DTE naked puts, is that with a small account, and again, I'm kind of starting to get married to TOS because that'll let me do the T-bills that Ed has convinced me of. TOS, and I don't have discounted commissions because of my small account, my not many years here. So closing costs matter on a small account. And that's been the one thing that's kind of held me back from change. Yeah, let's just close these things when they get to 95, 96%. So I'm like I said in the comment, I need people to keep preaching to me because it's about risk, because I am definitely a risk averse person. And it's now thinking, okay, how do I fully protect the account and then not have to worry about the closing costs of taking off risk?
Excellent point, right? So yeah, we gotta kind of weigh that out. Most of these 9-day periods are not going to have black swan events. Most of the time, you're going to be just fine not closing them out. A vast majority of the time, but then there's going to be those times, right, when crap hits the fan. We just don't know when that is. So yeah, you kind of gotta. I really wish they would work with us on commissions. I would imagine the day is going to come when we're going to probably have 0 commissions on these things as well. It's not there yet, but we tried to approach Thinkorswim from a collective unit and see if they'd help us, and they were kind of unwilling to. I was like, screw y'all. But yeah, it's so yeah, the preaching of taking off risk. So what I would do, John, if I were someone like you, yeah, ask every 6 months. Go back to them every 6 months. Hey, can you help me out? Can you help a brother out? And what will help you too, John, is if you can take a few scalps in there every day to kind of increase your activity, as long as you kind of got a kind of system. I don't want you losing lots of money to get better commissions, but if you'll do some scalps in the futures, that will help you, get more active. That's how I did it, right? When I was day trading, I was actually day trade. That's how I got the super low commissions that I have today. They wish they could take them back from me. But why don't you try a hybrid model, kind of like I'm doing? Not taking them all off when they get to 90-something%. Why don't you just kind of edge into a little, and maybe take off a little risk here, a little risk there. So you're kind of in the middle. You're kind of doing both things. John, how long have you been doing this with us? How long?
Since about March.
Okay. Well, how's your P&L doing? You ain't got to tell me specifically, but you should be up pretty good, right? If you've been doing this since March.
If I just look at my 1-1x trades, it's definitely been profitable the entire year.
Yeah. So, kind of take that into consideration as well, right? What do they say? Bulls make money, bears make money, and pigs get slaughtered. So we don't want to get slaughtered by being so greedy by not paying the commissions that we get, killed on a big move. So as long as you're making, and I'm thinking that we can do, 20% pretty regularly on this, you got a high class problem. High class problem is, I don't want to pay that commission, but oh well, here we go.
Yeah, Bobby, this is Hal.
Hey, how's it going, Al? How you doing?
I'm doing
We
fine.
don't call him Bobby because Bobby is his wife's name. I remember that.
That's right. And I live fairly close to Ed. I think he lives in Monty Hill over there across
Bless
the
your
lake.
heart. Do you lock your doors at night? Do you hide the women and children and all that kind of stuff?
Certainly do.
Ed and his white socks and Crocs.
Yeah, I go on the prowl at night. I'm big trouble.
Yeah. The one observation I made is, the 4 contracts you closed at a 2,800 strike to reduce your risk. When you put on your new one, I don't know where your shorts were on the new 112 you put on.
Let's see where they were. It's probably closer, right? Let's see where they were.
Probably about 3,030, probably about 33.
Yeah, here, 33.50.
Yeah. So now what you've done is you've kind of just transferred that risk to
Yeah.
actually a more, because you've increased, you're 500 points higher. So if you had this thing that everybody's scared of, this 20% decline, this would probably lose pretty close to the same amount as the 4 contracts that you closed. 500 points times 2 contracts is 1,000 times 5 is $5,000 worth of risk if it went down to the 2,800.
That's a valid point, right? Because we're much closer to the money. The thing is, and I think most people that have experienced it will agree, though, it's just easier to manage the farther out they are.
Well, yeah, you got time on your
You know,
side.
we've got so much time on our side. So, rolling.
But it's
out
not like you've been hesitant about closing them because they were point, 0.25% or something like that.
Yeah.
And like the other gentleman was saying about the commissions, a lot of these things you're putting them on for $50 or $60 for 112. And the commission, like closing it takes, you're making $60 after the first commission that comes out of it. You close it, you knock another $6 off of it. So now it's a significant percentage. The whole idea is that these things kind of come into the profit tent, but when the market kept going up, it ran away from all these ones that only have 9 days left.
Yeah. Yeah.
And there's no doubt that trading the micros at Thinkorswim is a costly endeavor. If you take in a pure sense $50 on a tranche and you exit you enter and exit the 112, it's going to be almost $20 in commission. It might be a little more. I used to calculate it. That is a huge amount. That's 40% of the total premium taken in. Like implicitly, you would not think that's a great practice over time. I have viewed the micros, and Bobby continues to trade them. Bobby has much lower commissions, and Bobby likes the volume of activity, which is great. But my commissions aren't low like his. And so I always told myself I'm going to trade the micros like I'm trading an ES contract, which would mean I don't give a damn about the commission anymore because the commission's tiny in relation to the total premium captured. But to me, it can't be denied that trading these micros at Thinkorswim in this way is an expensive proposition. Again, we're repeating, I view that as I've got to trade these like they're ES. I've got to think of them like ES monetarily. In other words, trade it like I would trade it regardless of the credit and the cost. So I'm training myself to trade ES properly when I graduate to the ES contract, which I've done. So if you plan on continually trading micros at Thinkorswim, you're going to be in a situation where you kind of almost have to just absorb that ridiculous high cost. I hear what Bobby's saying, and for a while I did try to do a bunch of day scalping to try to drive my commissions up. I just talked to these yo-yos again, and they basically said, I got to go over 500 contracts in a 30-day period for 2 30-day periods in a row. So I have to do like 1,000 contracts in a 60-day period. And if I do that, I'm spending over $2,000 to lower my commission by 30 cents a tranche. Per contract, or maybe $1.50 a tranche or something like. I'm not sure it makes sense to run your volume up to cut your commissions down because it's a lot of initial cost to lay out to get your commissions lowered for a long period of time, if that makes sense.
No, it makes sense because when I first started trading options with Thinkorswim, they had a ticket charge. And when you had a small account, the ticket charge could be 25% of your possible profit when you were selling something short.
Yeah.
Then I negotiated it. And now, several years ago, they kind of cut everybody's commissions down to, what is it, 60 cents now or something like that, But it used to be like $1.50 a contract and $5 ticket charge or $6 ticket charge.
You're talking regular options.
Regular options, yeah. And I mean, I was slightly profitable, but I mean, I didn't really become profitable until I got a 50 cent commission.
Mhm. Exactly.
Yeah, see, John says something good here too, right? So he's building into the commission, into the trade. So by doing so, what he's doing is he's increasing the premium received. So he puts the naked puts closer to the money. So he's taking a little more risk, right? But it's still, you know, they're still really, really overall safe. And he's kind of building that in. And that's, y'all see me do that as well, right? Instead of going out for the $10, I'm normally going 11 or 12 bucks on selling those, you know, the 2 naked puts. So yeah, you kind of build it in there, take in more money there. You know, so there's all different ways that you can do that. And $50 a trade, $250 a contract. Yeah, that was the old days, right? Man, I remember when I was buying Value Jet. I remember Value Jet. I was in Value Jet when the plane went down in Florida. I'm like, oh my gosh. And that's when you call them on the phone and, you know, you're buying stuff. Yeah, Nick says definitely a benefit with Tasty Works as there's no closing costs, right? And we saw that earlier when I did a thing. There was no closing cost. But they do have that little fee. Let's do similar
About
order.
$1.50, $1.25 exchange fee.
Is that what the exchange fee is?
I don't know. It's up there.
Let's see. Yeah, $1.04 on the. Yeah. So, I don't know, man. But I think the commissions are only going to get better, right? So, and again, go by your metrics. I think the metrics are going to be our best thing, right? And you saw what we did today. We made huge decisions based on metrics. You know, did I have to close anything? I don't think so. I think I'm good, right? So my metrics are a little elevated. I'm fine with that risk. If you're not, you know, start closing things. Get it back down to your 35%. Rome wasn't built in a day. We went from 15,973 to 16,450 left over. So we improved that, right? Here's where our usage is. We went down there, we went up here. How much more can we do? It's a great thing. Yeah, padding the premium received to pay for commissions and the short cover. And that's what we do in the Sweet Bobby hedge too, right? We got to make sure this takes into account everything, your commissions and everything. So in this, I'm trying to figure out, hey, how much do I have to buy my loans for in order to have everything work out where I can harvest that at about 94% so that I can make sure at least the hedge breaks even and doesn't cost me money.
That's a good way to pull it together. Good.
Yeah.
Try to explain this to people. Just refer them to that page and calculator, because you're already doing it. And that's what, you know, that's what I do. I do a 1-1x, whatever it is. I want to double I want to double the debit. So if it's a 10 wide, I want 20. I add 3 or 4 points to pay for things. So you could get out at the end if you want to, like what the discussion that started this out. Do we cover these naked shorts? Well, if you do it that way, you have permission. It goes back to that thing. You have to do this, or you must do this, and you may do this. You know, requirements and permission. And that way you can have that. And John could have his cake and eat it too. He can be safe. He can still get his premium, guard his small account. And that's great. And then that's it. But tying it into your calculator is smart.
That's probably what I should do is build y'all, you know, the ones of y'all that are really concerned about the commissions. I probably should build one, you know, right down here for the 112 too, right? So if I sell my nakeds at $12 and I'm buying my debit spread at $10 and I want to harvest, like Evan says, he's harvesting at what, 90% or more, then you could say, okay, if I want to harvest that short put at 90%, you know, what should I harvest it for and what will be my final P&L on that, so that you can go, okay, what was the P&L if I let it go to expiration and don't pay the commission? And then you could figure out, okay, if I'm going to pay the commissions to close it, how do I get that same exact profit with harvesting the shorts? Isn't that cool? That's maybe something I can think about. So that you'll have that calculator, that you could do that analysis and say, okay, I want to make the same price. I realize I'm gonna take a little more risk. I got to put my naked puts closer to the money, but yeah, that might be something I could put together. All right. Yeah, the IB, whatever, I can't even know what they are. IB brokers, whatever it is. Yeah, they're good on things, but I just heard that the platform is just junk though. And I've never played it. I'm just so used to Tasty and Thinkorswim that I don't know, man. I feel like I was in enemy territory, not knowing what to do. Yeah, it's not the best bread. Why isn't delta theta an important risk metric in the spreadsheet? It seems the primary risk metric is buying power. Well, what do you want your delta theta to be? Now, for example, Candy, if Candy's still here, Candy uses that, right? So in your Greeks and ratios, under some of these hidden columns, you unhide them, they're in there. You can use them. I used to have like Vega to Delta, Delta Vega, Vega Theta, Delta. I had all of them in there, and I just don't use them. Is it C column? Yeah, let's go to C column. All right, so we unhide. Well, there's my delta. This is SPX delta, not SPY delta. So then let's see here's something. Let's see. Let's unhide here. There we go, little fella. There's Vega.
Hey, Bobby, what
Yeah.
I mean by that is dividing the deltas by the theta to get that ratio.
Yeah, I've got it, and it's in here. Hold on. I got it here somewhere. Hold on. Yeah, here it is. There you go.
So with that, what it's telling you is the amount of directional exposure that you're taking based on your daily potential profit. So if that number starts increasing, it means you're taking on more directional exposure and you're not taking on as much potential daily profit. So you're actually adding more risk.
Mhm. And what I used to go by is I would use SPX delta for that. That's why it's using column C. And my best practice for that is the normal range was between negative 0.5 and plus 0.5. So, I mean, you look at what we've got, there's not a time at all when this thing has been outside of that bounds. And I'm sure I got that ratio from something that Tasty Trade, right, in their research. So as you can see, I don't monitor it. Look, there's never been a time in the whole history of us doing this that was outside of negative 0.5 to plus 0.5. So that's why I go, it's not something I need to watch. So I hide that. But yeah, y'all can, there's all different kind of things in here that you guys can. I mean, like Trey, he's measuring Vega now. He's keeping up with his Vega. He just wants to see it. No big deal. If you want to see your SPX delta, some people like SPX deltas, those SPY delta, you can use that. So I've got all kind of things built in here for you. All kind of ratios, delta, Vega, all kind of different things in there. I just don't think you need them. One of the things that Karen always talks about is the simpler she made it, the better. Simpler she made it, the better. So you guys need to be having your little, you don't need to have these conversations every day, right? We need resolution. Y'all need resolution. You need to say, I'm going to take something off and blah, 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 or I have the permission. It needs to be either a rule or permission. But again, I would recommend you to make all decisions, higher level decisions come from here, right? Higher level decisions come from here. If you can increase your data, decrease your buying power, that's just great. Now we know how to do it, right? We know how to do it. All right. Good deal, y'all. Wonderful session. I appreciate everybody participating. Hope you have a wonderful day. Again, we'll probably go early in the morning, maybe 9:30 or so. Eastern time, so I'll keep you posted on that since I got the state championship game for the Balnett Devils. Y'all be good. Bye.